Imagine this, you're caught in the rain, so you grab an umbrella. But wait, it's got holes. That's kind of relying on default insurance from your super. It's there, but is it actually protecting you? Now imagine another umbrella, a strong, sturdy and custom built for the storm. That's the difference between default insurance and tailored insurance. Hi, I'm Priyanka Shah, and for the last 5 years, I've helped hundreds of Australians navigate the confusing world of insurance. Today, I'm going to break down the truth about default insurance in your super, what it covers, what it doesn't, and why tailored insurance might be the better choice for you. Stick around because this could save you from a massive financial headache. Most Australians assume the insurance in their super is good enough. But here's the problem. I have reviewed hundreds of these policies, and let me tell you, the gaps are big. By the end of this video, you'll know exactly where default insurance falls short and how to build a plan that actually protects you and your family. Most people think that I have insurance in my super, I'm covered. But what if I told you that often expires when you hit the age of 65? It doesn't protect you very well if you're overseas. It won't pay out for critical illnesses like heart attacks, cancer, stroke, etc. Still sounds something like you can rely on? Let's dig into the details. Default insurance is like the bonus fries you didn't order with your burger. It's just automatically included with the most super funds. It usually covers 3 things. The first one, life insurance or death cover as you may call it, which is a lump sum payment that's paid out to your family if you were to pass away. The second one is total and permanent disability or TPD. This is a payout which is paid to you if you could not work again permanently due to a disability. And the third one, income protection, which is a portion of your income which is paid to you if you're unable to work temporarily or permanently. Sounds great, right? But here's the kicker. It's one size fits all. Let's talk about why that's a problem. Age-based expiry. For example, I recently had a client of mine who was 68 and actually came to me for life insurance. When I asked why he didn't go for life insurance earlier, considering that he wanted to cover his mortgage, he said that he was relying on his, I don't want to name the super fund, but he was relying on his super fund that had insurance, and he only realized it at 67 that it expired at 65. Like, he didn't even know he wasn't covered from 66 and 67. And imagine what if a health event had hit him at that point in time. He had a wife who was dependent on him, and he had an outstanding mortgage, which kind of left him really in a bad situation. Thankfully, we were able to cover him for it, but it's always good to plan ahead and make sure that you are covering yourself if you need to be covered for the longer run. The second one, overseas limitations. A lot of the default insurances in the super funds have overseas limitations, which means you may not be able to claim while you're overseas, or there would be a requirement for you to come back to the country to make a claim. For example, if you were living in Bali and you were still working from there and you needed a payout, guess what? It might not come through. And the third one, no critical illness. Default insurance does not cover for trauma or critical illness conditions. This means that if you suffer a major event like a heart attack, cancer, or stroke, you're on your own financially unless it leads to death or total disability. For context, over 145,000 Australians are diagnosed with cancer every year. Do you still want to take that risk? With critical illness, you may still be able to claim income protection if you were not working and if you were out of work due to your health condition, but it would not enable you to receive a lump sum payout which a typical critical illness or a trauma policy would give you. I recently had a client who suffered from a heart attack. Thankfully, had a 200,000 trauma policy which was paid out within 2 weeks of him being diagnosed with a heart attack. He had the luxury to take time off work, so he has been off work for over 8 months now, focusing on his health, allowing that lump sum payment actually allowed the partner to take time off work without having to worry about finances and really focus on bringing the husband back to normal health. And he is thriving at the moment and intends to go back to work in maybe a month or 2. But that wouldn't have been possible if he was only surviving on his income protection. His partner would have not been able to take time off work. His income protection is only a portion of the salary, which wouldn't have been able to really meet the mounting expenses that he had due to the critical illness condition and take care of his ongoing financial commitments that were already there. So think about that. And the fourth one, TPD limitations. This is a big one. Default TPD insurance only covers you if you cannot work in any job suited to your experience, education or training. For example, if you're a surgeon and you can no longer operate as a surgeon but could potentially work as a lecturer, you might not get a payout. On the other hand, there's the own occupation definition under TPD, which is available with tailored insurance, which pays out if you cannot work in your specific role. And the fifth one, switching funds could leave you uncovered. Got a pre-existing condition? If you switch funds, your default insurance might not transfer. That means you could lose coverage altogether, or face exclusions and higher premiums when you reapply. For example, you could be switching from an Australian super to a HESTA account. The Australian super insurance would not carry forward and the new insurance would be based on your current health conditions. Or if you were to go into a self-managed super fund in the future, this would not continue as well. So think about what you intend to do in the long run and plan accordingly. Tailored insurance is like ordering you a custom pizza. You pick exactly what you need and want, and it's designed to fit your needs. Here's what tailored insurance offers. It offers the critical illness cover, cost protection for your life's major events. The TPD definition could be opted for own occupation if you wish to be covered for your specific profession, and flexible options. Even if you switch your super fund, you can choose to carry your insurance with you and not have to reapply for it all over again. It's not one size fits all, it's one size fits you approach. Let me tell you about Jennifer. She's a 37-year-old architect with a mortgage and 2 kids. Like most people, she assumed her default insurance was enough, but after a quick review, we realized her policy would expire at 65, but her mortgage extended until she was 70. It didn't include trauma cover, leaving her vulnerable to major medical costs. Her TPD was any occupation, which wouldn't have paid out if she couldn't work as an architect. Like for example, if she couldn't do sketching, if something was to happen to her hands, eyesight. But if she could continue to do another job, it wouldn't have paid out. We set her up with tailored insurance that covered her family needs. Now she's protected no matter what life throws at her. Feeling overwhelmed? Don't worry, it's simpler than you think. Here's your action plan. The first step, review your current policy. Look at what's included and where the gaps are. The product disclosure statements are available on every superannuation insurance website, so use that. The second one, think about your future. Consider your family, your debts, your career, your lifestyle. The third one, talk to an expert. This is where I come in, or any insurance advisor for that matter. We work together to find the perfect policy for your needs. Default insurance is sure convenient, but is it enough? Don't leave your family's future to chance. Book a strategy call with me today and let's make sure you've got the umbrella for your life storms. If you found this video helpful, hit like, subscribe and share with someone who might need it. Thanks for watching and I'll see you in the next video.